Ayhan, let's just start big and broad. Pick like 3 of your highlights that you think it's important for our audience to know when it comes to moving out of the COVID pandemic.
So the first highlight, as you mentioned, we are expecting a historical contraction in global GDP. This is not just the worst episode since Second World War. It is the 4th worst episode since 1870. Second, wherever you look at, you see deep contractions in economies. In emerging market developing economies, we are expecting these economies to contract 2.6% this year. This will be their first contraction, at least since 1960. In the case of advanced economies, the contraction is going to be about 7%. The third important point, if you look at per capita growth numbers, those numbers are also quite disappointing. Per capita growth will contract by about 3.6%. And when you don't have per capita income growth, it is difficult to have, improved living standards in emerging market developing economies.
Ayhan, let's pick up on that point. You just reeled off a whole load of numbers in terms of what the economic impact is likely to be. In terms of your ability to forecast, how big is the kind of top and the bottom of the fan chart? And do you think the risks are ultimately still skewed to the downside in terms of your forecast?
Guy, that's a very important question. Obviously, we are going through unprecedented times. This is the first global recession triggered by a pandemic. So it is not just a forecast. You need to think about some possible scenarios. There is this possibility that, we might see a much faster, much stronger recovery. And I think that's what the financial markets are pricing in right now. And there you expect growth to be around -4%. That is 2 times larger than what we saw during the global financial crisis. So it is still a significant contraction. There is also a downside scenario if we see a second wave. If we see these containment measures in place for an extended period of time, then you will end up with around 8% contraction in global GDP and hope that we will avoid that. We still think that downside risks dominate, and the main reason for that, as much as you see gradual opening up in advanced economies, in the case of emerging market developing economies, still pandemic is in full force. In Latin America, in Sub-Saharan Africa, in South Asia, you look at infection numbers are rapidly increasing.
So what we've seen, though, in response across emerging markets and developed markets has been central banks and then plus stimulus. In particular, emerging markets are doing both at the same time. It's something they tend not to do together because they're worried about inflation. Do you know, can you get a read yet on what the best practices are to combat COVID and also help to set up an economy for recovery?
So, Alex, the important issue right now is to address the health crisis. And I think we have a reasonably good idea how to do that. These containment measures, starting with testing and then isolating and tracing, all critical. And then you would like to treat these patients that are tested positive as soon as possible. Now, in terms of policy, you need to reach out to vulnerable groups, the households who lost their jobs, corporates that are still viable, but they need liquidity support. And we saw around the world, governments have been doing that. In terms of central banks, there has been extraordinary support, and this has made a big difference. We avoided the worst of the crisis. If we didn't have these extraordinary measures, we were looking at a much worse outcome in terms of global growth this year.
Ayhan, have you baked any debt forgiveness into your numbers? Are you assuming any debt forgiveness, particularly for the most vulnerable economies?
Now, what we are assuming, more than debt forgiveness, what is on the table right now? And that's what, G20 countries got together and implemented in response to IMF World Bank initiative debt suspension for this year. This could be extended, and we see downside risk in terms of debt payments down the road. We believe that countries need more help. In our current forecast, we just incorporate this debt relief initiative of the G20.
So based on that, I want to piggyback off of that. What we've also seen, and you mentioned it, was a lot of central banks or governments issuing a lot of debt in order to pay for all of this stuff to deal with COVID. In addition to that, what we're continually seeing, and just look no further than some of the protests here in the U.S., is a real push for social justice, which is going to lead to income inequality, which is going to hurt portions of the population most hurt by COVID, and governments are going to have to pay for that. How do you see that evolving?
Alex, that's a very important question. Social justice issues are critical, and we work in emerging market developing economies. These issues are at the center of our programs whenever we think about adjustment, whenever we think about reform in these economies. One of the important consequences of this pandemic, we need to remember, there are going to be long-lasting scars. When you think about these deep recessions, you are not just basically recovering immediately after the crisis. You have these basically adverse impacts on potential growth for an extended period of time. What is the basic message? Policymakers cannot postpone the types of measures necessary to the future. So there needs to be some set of reforms in place to improve long-term growth prospects. And that starts with, of course, policies targeting health, policies targeting education, policies targeting productivity growth and innovation. And that is basically the big discussion down the road we will see, because we think that the crisis will have an adverse impact. We will feel for an extended period of time. Policymakers now, they need to address the health crisis. They need to address the immediate decline in growth, but they need to also look forward in terms of undertaking reforms to improve long-term growth and to address these deep injustices, most of the time reflect themselves in terms of inequality, in terms of poverty.